Jigar Shah is joining us right now for a discussion. Jigar, how are you analyzing this market right now? What are you recommending your clients? And I would be keen to know what kind of queries are they posting to you?
Hi Ajay. See, at this point of time, market is poised in a very delicate manner, and we have seen some amount of bounce back from the lower levels. But as we begin to get a lot of data, especially on corporate earnings and the other general macro data, the whole new situation is unfolding. And not only for us, but even globally, as we are all connected, the markets are going to go through a lot of volatility. And the only thing which I want to say at this point of time is that companies with no or little leverage will do much better. Companies where disruption in business is less or the management is agile to counter that kind of disruption is something where I would put my bets on. There are very few businesses which will have very little impact, but most businesses will have some adjustment time. But good businesses, as in the past, will be able to overcome this and do better. So it's a perfect time for a bottom-up stock picking. But obviously, there is no rush, and there is going to be a good amount of time available before this whole thing corrects itself. So, in my view, if you ask in particular the sectors, the telecom sector looks to be standing out even in the short term. And if they are able to take care of their balance sheet and cash flow situation, even in the medium to long term, it can be a big wealth creator from here. Consumer staples are definitely standing out, and they are typically the ones which are generating the free cash flows and pay large amount of dividends. So these are two sectors in particular where I feel very strongly that they will do better going forward. But the consumer discretionary sector and the various other sectors are going to have tough time. Pharmaceuticals and healthcare overall, hospitals, etc., should do better because of the higher allocations and higher requirement for hygiene, etc. But again, I think we have to wait and watch exactly how the trend develops and what kind of macro stabilization actions are taken by our government and elsewhere. So a lot of uncertainty as of now. We are not sure, how exactly some of the businesses will pan out, but a lot of pain is in the price. And now is a time where a lot of patience is required. But obviously, as I said, good companies with good management and balance sheet will do much better.
Jigar, this is a very unique time in our career's lifetime that we are seeing this market where the entire index, mega caps correcting like mid caps. If one were to look at slightly beyond the horizon of 6 months, 8 months, or even a year, if we are taking 1 year forward earnings to be flat or perhaps a little more negative, which are the areas which have corrected in a way which is giving you comfort on valuations, on quality of managements who will navigate through this slowdown and hence are best suited for portfolio building?
Well, at this point of time, I mean, if you just look at the data, the maximum correction took place in oil and gas, in metals, in banks and financial services. And the ones which are less affected are telecom, healthcare, consumer staples, etc. So my sense is that the good companies within the financial services or banks where capital is not an issue and their level of trust amongst their customers and depositors is high. I think those are ones where a lot of money can be made. Obviously, it will take time, but this is where a lot of money can be made. Similarly, I think the commodity companies which will survive this particular situation and which have low leverage, I think they will also do very well because they can have a better control over pricing and the industry would consolidate. In fact, many industries where a lot of consolidation will happen as a result of the small and medium sized companies disappearing or breaking down, that is something which is going to be globally a big phenomena, which will help the larger companies become even large. And that's something which is going to be evident in the resurrection phase.
Jigar, lastly, I would like your opinion on two areas of the market which right now traders, momentum guys, or perhaps mid-term investors as well are very interested in hiding behind, which is the consumer space, the likes of HUL, Britannia, big moves coming in. And though the medium-term outlook on volumes front has become hazy, and the second one is pharma space, which is coming out of a 6 year of underperformance, kind of again rising nicely. What are your thoughts in these two classic defensive historically, but structurally pretty different sectors?
See, if you look at the consumer stocks from the peak level, say somewhere in January or early February, even some of the stocks have corrected by 30-40%. Maybe Unilever and Nestle are an exception, but a lot of other stocks have corrected substantially. And the visibility of business, of demand, etc., is much higher in case of those companies than any other at this point of time. The only next business will be the data business or the telecom data. If you look at the pharma side, I would be positive but cautiously, because the important thing is that the demand in pharma cannot change overnight. And the other issue is that it is still a very early phase to judge whether the Indian pharma companies will benefit at the expense of the Chinese companies. There is a lot of talk that the supply chain change will happen after this COVID situation stabilizes, and Indian companies would gain at the expense of Chinese companies. That is something which is a core assumption behind the rally, as I see it. If that is something which is the case, then it needs to play out. I think we need more evidence on that. Also, it would be difficult to believe that the US FDA restrictions and actions on some of the companies or some of the plants or processes would be short lived or would be done away with. It's something which is not clear to me. So, therefore, again, I would say over there, the best would be to bet on companies which have very strong domestic position and have a good export and outsourcing base as well, but not really take it as an en masse trend for now.
Right. All right, Jigar, we'll let you go on that one. Thanks so much for sharing your thoughts on the various aspects of the market.